What the heck happened to stocks today? Tech stocks got slammed, growth stocks got hit even harder, but certain areas of the market, particularly value stocks, actually did quite well. I think a lot of investors and traders look at the market today and they're a bit confused because it was such a mixed bag. There was really this big divergence between the performance of value and growth stocks. So I decided to put together this little video to discuss this matter. So this is the first installment of what I'm calling my rapid fire analysis series. And in this video today, we're going to look at what happened in the market today. We're going to look at the indexes. We're going to look at some sector performance stuff. And then at the end of this video, I'm going to tell you where I think the market's going from here, what areas of the market could perform the best going forward. So let's just dive right into it. So the first thing we want to look at is just what happened today. So I took this little snapshot from Yahoo Finance, which shows the performance of the major indexes. So we can see the S&P 500 closed the day down about 0.7%. The Dow finished green, up about 0.5%. And the NASDAQ, which to me really stole the show, was down more than 2%, while small caps ended the day down about 0.9%. So I think this is pretty interesting because for much of this year, it's really been a tech story. Tech stocks have really been driving the market, at least the performance of the major indexes. And now we have this big divergence between the tech-heavy NASDAQ and the Dow. So when we look under the hood and we look at sector performance, this is also interesting to me because if you recall, during the first half of this year, communication stocks, technology, and consumer cyclicals were the leading industries. They were the strongest and best performing industries. And today you can see they got slammed. They were all down more than 2%. Meanwhile, utilities, healthcare, energy defensive, consumer defensive, and financials, those are what led the way today. And what's interesting about the top names on this sector performance chart is that utilities and healthcare are widely considered defensive industries. So they're industries that people typically buy when they're a little bit more nervous about the economy or the overall market. So it's interesting to see this divergence between the types of stocks leading today and the types of stocks lagging. Because we had such strong performances from healthcare stocks, staples also had a big day. Energy also finished green. Because those types of sectors did well today, we had a strong performance in the Dow. So you can see that the Dow after today is up about 2.1% on the week. So it's doing very well. And actually today was the 9th day in a row that the Dow had closed green. So when you look at the Dow, you look at this chart, it looks great. You can see that it had this bottoming pattern. It put in this bottoming pattern after breaking that downtrend and then pulling back and essentially retesting it. It built out this bottoming pattern. Now it's starting to wake up and climb out of that. So the Dow, I have no concerns about. The Dow looks great. The S&P 500 also, there's no real reason to be deeply concerned when we look at the S&P 500 right now. You can see we're still up about 0.7% on the week after today's pullback. So S&P 500 still looks pretty good. But when we look at the NASDAQ 100 ETF, so this is the Qs, we can see we're actually down on the week. And right now, when I look at the Qs, it's nothing too alarming, but as you'll see in a second, there are certain reasons to be a little bit cautious on the Qs because of their heavy concentration on tech. So that's what I want to show you next. So this is XLK. This is a tech sector ETF. If you follow me on Twitter at JSpitTrades, you've probably seen this chart several times before. I've also shared it in my YouTube videos recently. So it's a very important chart because tech stocks are the biggest holding in the S&P 500, and they're clearly the biggest holding in the NASDAQ. So they're the really important sector, the most important sector. And you can see here, last week we actually broke out and closed at new all-time highs. So that's very positive. That's very bullish. But the way this candle is shaping up right now is not bullish. So you can see that we had some follow through this week. This wick, you can see we got all the way up here, but we pulled back quite a bit, and now we're potentially, could potentially close the week down depending on how stocks trade tomorrow. So this is I think it's a very big Friday for tech stocks, and what I want to see is I would love to see XLK close the week green, but I think it's going to be a very big battle between the bears and bulls tomorrow. So that's definitely the thing I'm going to be watching most closely tomorrow, because basically, if we close red, the feeling I'm starting to get is that tech stocks are struggling to hold that breakout, and they're kind of stalling out at those former all-time highs. So that's something definitely to be mindful of. The other thing I'm watching very closely is the performance of the mega cap leaders. So this is the New York Stock Fang Plus Index. I actually had the top title incorrect. It's if you look on the chart, it's a New York Stock Exchange Fang Plus Index. So that's the correct title, and you can see the stocks that make up this index. So it's got Meta, Amazon, Microsoft, Google, Nvidia. Apple's also in there. So some very, very important companies. And you can see, similar to what we saw with XLK last week, this index, this very important index, closed at new all-time highs. But so far this week, we haven't been able to stick the landing. We're down about 2.4%. So to me, that's a bit concerning. I'd like to see a little bit more strength. Maybe we need a little bit more time to really have a powerful breakout. But so far, these mega cap tech stocks, which is primarily tech stocks, but it also has some other stocks in there. But these mega cap stocks are sort of struggling to reclaim those all-time highs right now. And something else to watch is the performance of those stocks versus the overall market. So in this chart, I have the performance of the New York Stock Exchange Fang Plus Index versus the S&P 500. And while we still have a few more days in the month of July, you can see that we haven't been able yet to close at new all-time highs on a relative basis versus the S&P 500. So to me, that's interesting. And what that suggests to me is that we could potentially see some rotation out of those mega cap, large cap stocks into other areas of the market. So that's something to definitely keep an eye on going forward. Another area of the market that I'm watching extremely closely right now is the performance of semiconductors. So semiconductors have been one of the strongest areas in the market since back October, when the market really put in its bottom. And what we could see is that last week, similar to XLK, SMH was able to close at new all-time highs. But so far this week, we haven't been able to stick the landing. We're down about 2.5%. And part of that's been driven by some poor earnings report reactions from some large semiconductor stocks. So we'll have to see how the overall group does. But right now, I'm a little bit cautious on this group. It's acting a little iffy and hasn't been able to stick that landing in its attempt to break out to new all-time highs. So something to definitely be mindful of. It might just need a little bit more time, but it's not something you want to take lightly, in my opinion. I'm also watching very closely for the performance of software stocks, because after breaking out of this space, we had a little rally. You can see we put in this bull flag, and then we had a big breakout of that pattern. And so far this week, though, we haven't had any continuation. We're actually slightly down on the week. So I want to see how this closes, how IGV closes. Potentially this could be setting up for a pullback in software stocks, which have been one of the hotter areas of the market. By no means am I, long-term bearish on this group, or even intermediate-term bearish on software stocks. But what I'm seeing right now could suggest that we, may be about to see a pullback in some of these high-flying software stocks. So it's something definitely to keep an eye on going forward. As far as other areas of the market that are doing well, I've been really impressed by what I'm seeing out of healthcare stocks. So this is XLV. This is the healthcare sector ETF. And this is a chart I've shared on Twitter before. I also shared it in some of my recent videos. And what I was pointing out in those prior videos was I was very curious, and I know a lot of traders were wondering the same thing, so essentially healthcare stocks have more or less traded sideways since mid-2021. They've been bouncing around in this range and sort of consolidating range bound. And I think a lot of people were wondering, a lot of traders were wondering, was this distribution or was this accumulation? In other words, was this just a base for healthcare stocks to build up some steam and energy to begin their next move higher, or was it a major topping pattern? And I think this week we're starting to get signs that the answer to that question may be that healthcare stocks are starting to break out of an accumulation pattern. So we're starting to break out to the upside, which is very good for the overall market, because healthcare stocks are the second largest holding in the S&P 500. So this is a very interesting chart, and could very well suggests that we, going forward, if those large cap and mega cap tech stocks, need a breather, one area of the market that could see some rotation and already is seeing benefiting from some rotation is healthcare stocks. So it's something to definitely keep an eye on. I'm also closely watching consumer staple stocks. So this is XLP, Consumer Staples Select Sector ETF. And you can see we put in this bottoming pattern here, and then we broke out and had this breakout attempt, and we broke that downtrend line, but we couldn't stick the landing. So we pulled back, and we needed a little bit more time, but now we're breaking out again. So consumer staples is an area of the market that I think we could see some leadership emerge from in weeks and months ahead. So it's very fitting with the overall theme of rotation. Basically, so far, I think two areas that are showing clear signs of being beneficiaries of rotation are healthcare stocks and consumer staples. As far as other areas of the market where we might see some rotation into going forward, I definitely have my eyes on the energy sector right now. So this is XLE, kind of similar to what we saw with XLV, which is the healthcare sector ETF. What's happening with XLE right now is it's just starting to get really, really tight and bump up against that downtrend. So you can see here. And so to me, energy stocks are definitely on breakout watch. And that would be very interesting to me if that would be another area of the market that, could join, participate in the upside after basically, trading sideways and really, really trading in a range for quite some time. So energy stocks are definitely high on my watch list right now. I'm also really closely monitoring the performance of materials. So this is the materials ETF. This is XLB. And if you've seen my previous charts that I've shared before of XLI, the industrials ETF, this looks like industrials. Materials look like industrials before industrials had that big breakout and broke out to all-time highs. So this is another area of the market along with energy that I think could potentially be the next area of the market that we need to watch for breakouts and watch for money to rotate into. That's basically it for this first installment of this rapid fire analysis video. I just wanted to put together this video to tell you what I'm seeing in the market right now, because I know it was a pretty confusing day in the overall market right now, and I think just what's happening right now is not anything particularly bearish. What I primarily think is happening, and we've had the charts in this presentation to really prove it and to make a good argument that what's happening right now is rotation under the surface. So money is rotating out of leading industries within tech, particularly semiconductors, and to a little lesser extent software stocks, and it's finding that money's finding its way in other areas of the market, such as healthcare stocks, staples, and potentially soon to be energy and material stocks. So that's it for today. I hope you found this video informative, and until next time.